Shares of ASML sliding nearly 7% on a day where the entire semiconductor market took a turn for the worse as those export controls on semiconductor names, specifically with NVIDIA's chips, were announced. The question is, ASML is teetering, and I mean teetering, on a bed of support and is testing a nearly 17-year uptrend that started back in October of 2008. So the question is, can you buy this nearly perfect trend reversal at its lows at the current valuation of $640 a share? We'll talk about that as it relates to their Q1 earnings, which came out earlier today. We have to talk about the escalation of the trade war, more specifically as it relates to controlling the export of semiconductor technology into the country of China. We'll talk about what that means in terms of new competition that might come out from the Chinese semiconductor industry. And we also have to, of course, talk about the all-important metric that gets this whole value chain to run, and that is the CapEx figure by the hyperscalers, whom we'll hear from in just a couple of weeks. And it all relies on whether their CapEx projections for the year stay the same. We'll put all of those into perspective as it relates to ASML Holdings. Hey guys, hope you're doing well out there. If you are new to the channel and find this type of content valuable, be sure to hit that like and subscribe button below. It would be much appreciated. Shares of ASML over the past 1 year down about 28%. Year to date, though, you are just off about 8% from those year-to-date highs. But if you look at a 52-week range, this stock traded up as high as nearly $1,100 a share. So you've basically been cut in half from your 52-week highs. Now, ASML's Q1 earnings came out actually very, very nice. You saw revenue growth of about 46% year over year, with revenues of about 7.74 billion euros. Keep in mind, this company based out of Netherlands, so a lot of these figures we'll look at today are in euros. Pardon me if I say dollars at any point. Now, that did come basically in line with the expectations, and keep in mind, again, 46% growth year over year is very, very strong. And for a company that doesn't now have a screaming valuation at just 25 times a forward earnings multiple, we'll see that valuation actually seems fairly low for a company growing this fast. In terms of earnings, also came in pretty much in line, about 6 euros per share on a GAAP basis. Now, ASML did provide quarterly booking numbers for Q1, which is a basically key indicator for the orders in the upcoming quarters, upcoming year. And they provided that quarterly net booking figure, about 3.9 billion euros. The expectation on the street was closer to 4.7 billion euros. So well underneath what the street expected. And then of that 3.9 billion, about 1.2 billion is your extreme ultraviolet or EUV machines, which are the basically leading and bleeding edge machines coming out of ASML. So that's one thing to know, the fact that you had very strong revenue growth in the previous quarter. Even over the past couple of quarters, you've been growing very, very nicely with ASML, but the fact that quarterly net bookings are down from at least what the street expected, that is also bleeding into the outlook for the upcoming Q2 that we're in. ASML expecting net sales between 7.2 up as high as maybe 7.7 billion euros. That would land somewhere about, even at the midpoint, 7.5 billion euros. That does come in underneath what Wall Street was anticipating at nearly $8.8 billion. Keep in mind, this is in US dollars. So even if you adjust the 7.5 billion euros into dollars, translates to about 8.6 billion US dollars. Again, coming in underneath the midpoint analyst expectations for the upcoming Q2. And as you look ahead, the growth rates are expected to come down to 15% in Q3 and then low single digits into Q4 and into 2026. So keep that in mind. The growth rates over at ASML, they will have tougher and tougher comps, and so those growth rates begin to slip. And so maybe as well, the multiple doesn't demand the same premium that it once had, simply because the growth rates are beginning to slow down. The other thing you had is a gross margin figure of between 50 to 53% for the upcoming quarter. ASML did say that that's a pretty wide range, at least compared to what they usually report, and that's because you have a lot of uncertainty due to the tariffs, due to the trade war escalating as well. And so it's a bit harder to predict what those orders will look like, where especially those geographies will contribute more to, and that certainly affects the gross margins and operating margins for a company like this. This company, on the bright side, did continue to expect their full year 2025 net sales be between 30 billion up as high as maybe 35 billion euros, with gross margin somewhere between 51 to 53%. So there's your bright spot. They're continuing to reiterate their full year guidance, their Q2 guidance, and Q2 net bookings coming in slightly underneath what Wall Street was anticipating. And then as the growth rates slow, you have a bit of fear moving into the back half of this year, as well as into 2025, especially considering the fact that now you have an escalation of the trade war and what that could mean for ASML sales into the country of China. Also, what that means for ASML suppliers, considering the fact that they get a lot of their parts from various countries, and if they're now subject to tariffs across the board, well, then those suppliers will likely raise their prices for ASML as well. Now, today NVIDIA did disclose it received a notice from the US government requiring a special license to export H20 GPUs and other related hardware into the country of China. Now, the first thing you got to know is the H20 GPUs are already quote-unquote dumbed down version of the H100 GPUs by NVIDIA, which are now about 2 years old. So keep that in mind. You have the latest and greatest Blackwell GPUs, which aren't allowed to be sold into China. Then you have the H100 Hopper series, which also isn't allowed to be sold into China. And so NVIDIA went out there, made these H20 GPUs that complied specifically with the export rules allowed to be sold into China. These sort of export controls were placed by the Biden administration, and now the Trump administration taking it a step further, saying that, yeah, they're basically not allowed to sell even the quote-unquote dumbed down H20 GPUs into the country of China. And NVIDIA did say that they will take a nearly $5.5 billion hit in terms of its Q1 quarterly sales from these export controls. And keep in mind, China makes up roughly 10% of NVIDIA's overall sales. And so $5.5 billion hit, again, that is certainly meaningful. That does affect the fundamentals of these companies. And so when you see these names trading down today, or in general on this news of those export controls, especially for NVIDIA, it is absolutely meaningful to their fundamentals and is not something you can brush aside. The other thing is it also affects other rival chip makers like AMD, possibly also Broadcom to a lesser extent, but AMD did say that they'll experience a nearly $800 million hit from those export controls to China. And keep in mind, some companies will take a bigger hit, namely AMD. They get a little bit more of their overall revenues from China compared to NVIDIA, which get about 10% of their net sales from China. And of course, that does affect names like ASML, as again, those affect the quarterly bookings, especially if you start targeting the NVIDIAs and the AMDs of the chip industry. If you start really tackling the top of the food chain, well, then that'll affect their suppliers, that'll affect equipment makers, that'll affect manufacturers like TSM and Samsung as well. And that effect really trickles down the semiconductor chain. And that's why you're seeing the whole industry as a whole slide on the back of this news of NVIDIA really needing a license to sell their H20 chips into the country of China. Now, of course, like we said, that affects a company like ASML because ASML gets about 27% of their net sales from the country of China. And so if these export controls continue to get more and more intense, if the trade war continues to escalate, well, then maybe companies like ASML will also be restricted to sell into the country of China. And in fact, they were asked about that on the conference call, and one of the analysts did ask that, is China still going to be about 25% of sales this year? And then also, how does China fit into the rest of the backlog for next year? And so ASML management did say that, yeah, China will be about 25% of sales this year, and more importantly, reassured that China is still part of the backlog, and about the same number, between 20 to 25% of the backlog is coming from China. So that's at least good sign that management isn't really changing their guidance, isn't really changing their outlook on a premature basis to the fact that the export controls are tightening and that the trade war is heightening. But this certainly is adding on to the risk factors that perhaps if ASML isn't able to sell their EUV or even their deep ultraviolet machines into the country of China, well, that will have a meaningful impact on their bookings, on their net sales in the future quarters, in the future years. So keep that in mind. China makes up roughly 27% of ASML's net sales. The other thing you can have from this, or the indirect effect from the fact that you have such restrictive export controls, especially for semiconductor names, is the fact that you have Chinese competition being forced to be developed. Certainly, if you restrict the greatest and the best semiconductor technology from the US into the country of China, they're not going to sit on their hands. They're not going to take it on the chin and do nothing about it. They're going to have their own technology, and their own companies begin to start developing semiconductor technology to remain competitive, if not continue to advance in the AI arms race. And so you have a company like Huawei, which actually is testing out and trialing the extreme ultraviolet or EUV lithography systems needed to produce the most advanced chips. And so if companies like Huawei and other Chinese names are basically forced to develop this technology simply because they don't have the access of machines like ASML or semiconductor technology like NVIDIA, well then yeah, those companies will absolutely be able to figure out. We've seen China do this in the past. We've seen it with DeepSeek, in fact, the fact that they were able to compete against the US's best LLMs, in fact, maybe outperform them on certain metrics, really shows you that the competition coming out of China is absolutely a threat, and certainly Chinese companies and Chinese competitors can probably do it at a fraction of the cost the rest of the world can. So keep that in mind. The fact that the trade war continues to escalate, especially on a semiconductor front, that could be a troubling sign in terms of challenging the moat for some of these really, really high moat companies like TSM, like ASML, of course, like NVIDIA and AMD as well. The other thing, before we get into the current financials for ASML, the other thing to really, really pay attention to this earnings season in particular is the fact that you still have CapEx projections for the current fiscal year from your hyperscalers like AWS, like Amazon, like Google, like Microsoft, Oracle. You could even throw in Meta in there. This year, they have promised nearly $350 billion in CapEx for fiscal 2025. The question to be seen, or the question remains, is will they revise those CapEx projections, considering the fact that now you have this trade war and the tariffs in effect that will absolutely impact products they sell and maybe advertising they do. And so if these companies are premature in reacting to these tariffs and trade war, and if they begin pulling in these CapEx figures simply because maybe they're a bit uncertain, they want to control costs, they don't want to go out there and spend at a time where they might need to maybe lay people off or control costs, and if they start pulling in these CapEx projections, well, that is where you see the domino effect taking place. That's where the house of cards really begins to crumble, because if these CapEx projections get pulled in, well, then that means absolutely disastrous things for companies like NVIDIA, companies like AMD, companies like Broadcom. Then you go down the chain like TSM, and then you go further down the chain like ASML and other suppliers, and you basically get a slowdown, at least a temporary pause in AI spend, and that could be disastrous for these companies in terms of 2025 earnings growth, revenue growth, and their overall fundamentals. But again, all of that relies on the fact that if these hyperscalers, which is a big if they begin to rein in these CapEx figures, well, that is your first sign that the semiconductor industry is probably heading into a downturn, into its cyclical downturn that it tends to every couple of years. Now, if I had to come out there and make a guess today whether or not these hyperscalers will begin to pull in their CapEx, I would actually say they most likely won't. I'd in fact say they'll likely reiterate their CapEx for the full year, simply because the tariff and the trade war currently at this point is really uncertain, where it's tough to make those decisions to pull in CapEx, especially at a time where you have so much competition also willing to spend enough to build out their AI infrastructure. So let's say if AWS comes in and makes a statement that they're pulling back their CapEx spends and Google and Microsoft don't, well then right there Amazon just fell behind on the AI arms race, and that's not something they can risk doing. In fact, from their previous earnings call, we've seen and we've heard all of these companies say that it's more risky to underspend on AI CapEx rather than overspend. So if I had to guess, these companies likely will continue to reiterate and maintain their full year CapEx projections, and it's pretty unlikely they'll begin to rein those in. But certainly, boy oh boy, if those CapEx projections come in, well then that is your first and clear sign that there is a lot more pain to come in the semiconductor industry. Now, in terms of ASML's financials for this most recent quarter, things look great, in fact, especially when you compare it on a year-over-year basis, especially the growth rates still very much intact. This company doing a very nice job growing those net sales, growing margins as well. You see those net sales go from 5.3 up to about 7.7 billion euros. Keep in mind, these are in euros. You also have those cost of sales not really growing as fast as your sales, and so you were able to increase your gross profit, increase those margins as well, and then that translates to your operating income and go down all the way to net income, up from about $1.2 billion last year to now sitting at about $2.4 billion this year. So they nearly doubled their net income on a year-over-year basis. You also see the shares outstanding stay relatively flat to slightly down. This company is executing on that buyback. I mean, again, from their financials, things look all good. It's the upcoming quarters and the guidance in terms of China and net bookings, along with the commentary that you hear from hyperscalers in the next couple of weeks, that will really tell you the direction the semiconductor industry will move in. In terms of the balance sheet, you still don't have much to worry about as it relates to that. You're sitting on about $9 billion in cash and cash equivalents on a sequential basis. Some cash did leave the building. We'll see where that went. As you see, long-term debt didn't really budge, as that sits at about $3.6 billion. They also have another 18 billion in current liabilities, but again, sitting on about 27 billion euros in current assets. So nothing to be concerned about from a balance sheet perspective. And then from a cash flow perspective, you pull down that about $2.3 billion net income figure. You get to add back some depreciation, some amortization, not a lot of stock-based comp, and this company controlling the amount of CapEx they're doing in terms of purchase, property, plant, and equipment, that coming in at about $400 million. You see sequentially that is down year over year. It's basically flat to where they were last year. The majority of this company's spend, at least at the current quarter, was in the purchase of treasury shares. This is your buyback over at ASML in the most recent quarter. $2.6 billion, 2.6 billion euros in buybacks that they did. That is actually greater than all of the previous 4 quarters combined. In fact, it's nearly 4 times the previous 4 quarters combined. And so I actually like to see that at a time when shares were near all-time highs, ASML wasn't really out there buying back shares. Now that the fact you have shares close to the bottom end of a range, they're aggressively doing that buyback. So something I actually do like to see. They also pay out nearly 600 million euros in terms of a dividend. So you also continue to get that over at ASML. So all things considered, you had some cash leave the building over the most recent quarter, but keep in mind this company is still flush with cash. They don't have a lot of debt, at least compared to the cash on the balance sheet. So from a cash flow perspective, still quite healthy over at ASML. Now, from a technical perspective, this is really the all-important question you have to ask. Look, when stocks and ETFs get down to ranges where they make sense technically, the question is, are you the type of investor that has the guts to step in and be a buyer? Or are you the type of investor that will always say that, oh, the stock will likely continue to head lower from here, so let me wait out and try to time the bottom? If you've been watching the channel for quite some time, the philosophy here is pretty simple. Whenever stocks you like, whenever high quality names, certainly like ASML, get to the bottom of a range, well, that's a point where you can absolutely step in, be a buyer, at least take a shot. And if you are maybe a little bit worried about your principal, well, then that's where you set a stop loss. In case shares basically break down, you are looking to get stopped out, and your stop loss would probably be not much lower, actually, right here at 580. That's a range where you certainly don't want to break 580. That's probably your line in the sand, considering that's been your bottom in the past. That was also more recently a bottom, and certainly if you break that, you're probably coming back here in this range, somewhere in the low 400s or the high 300s for a matter. So that's certainly a trade you can look to play. You have about, call it 4 to 5% in downside, maybe as much as nearly 10% in downside, with the hope that you get some resolution from this trade uncertainty and from the tariffs, and then you make your way back up into this uptrend and begin to walk your way back up. And that could be an upward move of as much as maybe 100% if you get all the way back up to the top end of a range. So these are levels where the risk reward, at least from a price action perspective, really makes a lot of sense. These are certainly levels where you take your cracks at names like this. Certainly when you are at the bottom of a range, you set a stop loss in case shares really break down and you head lower, well, you'll get stopped out. But likely what you'll see and what you have seen in the past is a name like this tends to find support when it gets to the bottom of a range, which it doesn't do all too often, but when it does, tends to rebound pretty nicely. And the fact that you have a very volatile news cycle, the fact that every day on a daily basis things are changing, things are really uncertain, you could have a lot of pops and drops on this, where at least the patient investor can certainly look to capitalize. If you are a bit uncertain of ASML at these levels, well, the thing you'd be waiting for is to hear from big tech earnings about 2 weeks from now, where they'll say their CapEx figures. Either they're pulling those in, perhaps they're reiterating those, and certainly if they reiterate those, well, then that is your signal to continue to be a buyer of the semiconductor names. Because let's say they pull in those CapEx figures, well, then it's not just ASML, it's pretty much your whole semiconductor industry. It will take an absolutely dump out the bottom. You'll see your SMH come down into the 130s. Your SOX ETF, which is a bit more NVIDIA heavy, will probably break this 130 level as well. And then names like NVIDIA, those will likely lead the pack down, as you'll have a major re-rating in the whole semiconductor industry, and you'll probably likely come back in the 40s or 50s with a name like NVIDIA. So keep that in mind. Look, if the semiconductor industry takes a turn for the worse, it's not just ASML that will dump out the bottom. It's likely the whole SMH, ETF, and your whole semiconductor industry. That was my take on shares of ASML. A couple of really key things to watch. The first one is the fact that you have big tech earnings in just a few weeks. You want to pay attention to the CapEx numbers. If they begin pulling those in, well, then look out below. The other thing you kind of want to pay attention to as it relates to ASML is the fact that you could perhaps have competition brewing in China, and so that could be maybe taking away some of the moat over at ASML. Keep in mind, these machines that ASML produces still very, very complex, and they're not reproduced all that easily. It takes decades and decades of R&D, so you still have some defensive moat with a name like this, but keep in mind that could be more and more in question, especially if the trade war continues to escalate, if both China and President Trump don't really blink. Well, it's the semiconductor industry that will be the one taking a beating. Let me know your thoughts on this one in the comment section below. As always, thanks so much for listening. I'll catch you guys in the next video.